All right, not the most flattering angle, but this will fucking work because I can't sleep. So, to touch up from my last video, there's a reason why I didn't use the VWAP. Well, I don't use the VWAP in my current trading strategy. Simple reason, right on the head of it. I'm not a fucking day trader. Trying to use it this past week and look at it, I'm like, okay, but I have work and I have shit to do, so not working out well. Uh, yeah. And the next bit on the agenda was a Backo something trading style. Another day trader. Xing that out. I'm going to just skip to Smart Trader, another trader that I'm learning from in the guidebook, so that way I can still keep with it and close itch this out. Because for next week, I'm going to include K Dot, not Kendrick, but the trading strategy with the K holds. Find out what that is next week. All right, let's get to it. All right, so this starts off with Smart Trader with uptrends, downtrends. So you're looking at the big patterns that you'll see when you click onto a chart. So one of these uh, infographics is ass, but you'll see when you get there. The basics is uptrend, downtrend. As you see, uptrend for a wick down there, wick up to here. The next one closes above that, uptrend, downtrend, inverse. Boom. So with pullback, because you know when the stock runs up, pulls back to check, and then goes further, it has to close under that candle that did the high. And it's the info that's ass. So you see the run up here is fine, but the next one is just closing. It's still above, still in that candle. The wick still closing in. Same here, still inside it. This one technically still inside it. That's why this infographic is ass, because this one didn't close below. Like it closed below, like yeah, there. But if you're looking by the wick, go by the fucking wick, not where it closes there. It's retarded. But it corrects it in the rest of the pictures. So moving forward, it's like this with impulse and correction. Let's just, for a second though, pull back. So you see the run up, little sideways action here, not a pullback, just consolidating because boom, let it close under there. You see when it gets up to here, this is the one that made the high, and then boom, this one closes under it. So that will be a valid pullback. Just like here, this one's the high, boom, goes way below it, valid pullback, etc. So impulse and correction. Impulse is strong, pulls has great movement and correction. So it's previous. Breakdown of scene. Okay, so what we were talking about before. It was gonna run up, pull back, come up, and it's gonna come back to test that low from before. On candles, it's easier to see. See, this one does it. This one doesn't do this well, maybe like there to there. There's that come to test that high. But you see here, take it out, bam, bam. That's the break in market structure that you would look for. Because there's this high here. And let's say we weren't looking at any of this. There's a high, and then it starts going. Obviously, it's in the pullback. It starts coming up, and you're like, oh yeah, let's go here. Not yet. You can't say it's a uptrend yet or that it's back in its groove yet because technically it hasn't broken this yet. Because this would be the wick that kind of tricks you or kind of trips you up some. So this you'd have to watch for. Of course, this, like I said, this isn't here for context. Go down, come up, and then now you can say, okay, now it broke out. So if this is the down move here, like let's say this imaginary candle, then this would be the down move before the up move that broke market structure. That will be the market structure break that you're looking for. And then in here it shows that, it's going to come in, boom, and then bam, pull back. But when it pulled back, it kept on pulling. So that previous there, it just kept tanking. You have to watch for like the impulse correction. Should have this doesn't matter. This is just another picture showing the same thing, which makes it kind of easier to understand. See, it's coming up here, then boom, goes in below, so look there, down below. You wouldn't count that, so keeps going. closing below. Still bad there. But either way, closing below. Bam. Then let's pull back. Doop. Let's go up. Oh, didn't count it yet. Boop. Now we go. So this is the down move for the up move that you'll for market structure. So we draw a box here, and then you'll probably touch with there, then bing, go. Because came to check that low again. Let's do the same thing here, because boom, you see it broke out. Draw a box there. It came low to bing, touch it. And then it just kept touching going down. So changing character, aka shifting market structure, everything back to number one how we started here. So when you had this the bullish scenario, with the bearish, you have to see that it's just the inverse of it. So it's coming down, high, then coming down, and boom. It's like, oh yeah, it's gonna do the high again. Yay. Nope, 'cause remember this high there. Let's see what it's gonna do around there. It gets there, goes a little bit, and buyers start getting in thinking, oh, it's gonna go up. But they were wrong. Boom, boom, boom. They're just selling out, selling out, selling out. And it comes back and they're like, all right, yeah, I just might as well get the fuck out of here. Boom, get out. Or people buy there thinking, oh, it's gonna pop back up. Nope. So they bought there thinking it was gonna pop back up, right? It keeps tumbling, tumbling, tumbling down. And then when it gets come back up, the people that were here that bought in, that thought it was gonna go up, say, fuck this. I just want to get out and get my kids their college fund back. That's normally sprayed even. So they bail. So of course that happens the next day. Keeps on tumbling. Think about where the buyers are, like Josh does, like y'all talked about. Buyers, sellers, what's the scenario? What's going on? Praying for a mid swing, but I'm still watching it. Just because it's the change character or breaks above, we need to see if it holds there. Oh, and that's it. All right.